are live. Welcome to everybody trickling in. I'm so excited for today's session. Janet, I'm just going to turn it right over to you.
Yeah,
Do you want to just let everybody know a little bit about like who you are before you get
yeah,
started? And
sure.
yeah,
I don't think I've ever actually done a webinar in Zoom too, so this will be new and exciting for me.
yay, yeah, awesome.
Um, well, hello. Thank you for having me, Eden. My name is Janet LeBlanc. I run a business called Paper and Spark, and I'm a CPA, a certified public accountant here in the US. And I got started on this journey. I work really with creative entrepreneurs, a lot of handmade sellers, artists, makers, and digital product sellers, e-commerce sellers, basically product sellers in one way, shape, or form. And I got started doing this because I started a handmade jewelry shop back in 2011 as a much needed creative outlet from a not fun accounting cubicle job. And through my time as a maker and an Etsy seller, I kept running into other creatives with all of the tax, financial, bookkeeping, money questions. And there wasn't really anything out there at the time for product sellers. There's information out there for like big, small businesses or maybe even like freelancers, service providers. But there's a lot of confusion and overwhelm around these topics when it comes to e-commerce. And I really tried to resist doing it for a while because I wanted to not bring that less fun accounting side of things into my creative outlet, but I succumbed in 2014, started Paper and Spark, and it's been so fun, so amazing. I love being able to bridge that gap for people because I want you to make more money. I want you to feel good about making money. I don't want you to let confusion or overwhelm on these topics hold you back. So that's what we'll be chatting about today. Just a little piece of that puzzle to hopefully help you feel better and more confident about the tax side of running a shop.
Awesome. So Janet, where do you want, if people have questions, do you want them to pop it into the chat or the Q&A box? Do you have a preference?
Oh, there's a Q&A box
Yeah.
versus a chat. Let me see if I even know how to get to the Q&A box. Oh, I see. I'm really fine. I'll keep both of them open
Cool.
on my other screen over here, so y'all can pop them into the chat or the Q&A, whatever
Awesome.
is easiest for y'all. And I know that some people submitted questions in advance. I have those on hand too. Can y'all see my screen okay?
Yep.
Okay, so I'll run through some slides and then I will definitely have time for questions at the end, and you're welcome to ask as we go. And if it fits with what we're talking about, I'll answer you in the moment. But what I'm going to chat about today is the difference between a business versus a hobby when it comes to your tax responsibilities. And this is pretty specific to US tax stuff. So keep that in mind if you're not in the US. We're going to talk just a little bit about how to deal with income taxes and a few other things related to getting your financial ducks in a row, like if you're considering yourself a business. So I've already introduced myself, Janet LeBlanc. I'm an Enneagram 5 and an INFJ. If you're familiar with Myers-Briggs or Enneagram, that should be no surprise. That's like the analytical, boring nerd person. Introvert, basically. Um, and my goal today is to help you not feel gross or feel just a little bit less gross on these topics. So let's dig in. There's a lot of misinformation out there when it comes to, am I a business? Am I a hobby? Can I fly under the radar? What is the threshold? At what point do I have to deal with XYZ? What if I've never done this? What if I've never filed this piece of paper? I haven't made X amount of money yet, so I don't have to whatnot, something like that. So we're going to get clear on exactly what those thresholds and bars and requirements are. Let's see, I can't see the slides. Do I need to be penned? Are my slides here, but I'm small? maybe?
I can see your slides.
Okay.
Okay, it looks like other people can see them, so it might just be Daniel,
Okay,
that
great.
might just,
All
oh, you
right.
can see them now. Okay,
Great.
perfect.
Maybe just a
Okay,
delayed comment.
cool.
Perfect. All right. So let me know in the chat if you have ever heard any of these rumors. I'm just a hobby. I don't have to deal with reporting this stuff on my taxes until XYZ happens, until I actually file my business registration paperwork. I don't have to report this stuff for taxes until I make at least $1,000 or until I turn a profit. Or since I haven't filed as this particular business with my state, I don't have to deal with this yet. Any sort of rumor like this on the internet. I'm sure we have all seen them to some degree. Today, we're going to replace those rumors with actual facts. I'm going to tell you what the real definition of a hobby is versus a business in the eyes of the IRS, when you really have to start claiming stuff on your tax forms for an online shop, and what it looks like to claim that stuff on your tax forms, how a business versus a hobby is taxed when it comes to income taxes, and a few other things outside of the income tax realm that you may want to have on your radar if you haven't taken care of those things already. So let's talk about the definition of a business. The biggest point that I want to get across is that when it comes to income tax purposes, contrary to popular belief, there's not a sales dollar threshold to be considered a business. It is all about your intent and how you are running the activity that you're debating as to whether it's a business or a hobby. If you are carrying on this activity with the reasonable expectation, the intent to make a profit, then you're considered a business. Even if you haven't gotten that registration, or even if you haven't opened a business bank account, that sort of thing. If there's one of you running this activity with the intent to make a profit, then you automatically default to being considered a sole proprietorship. That's your business entity, and you're responsible for dealing with that money on your tax form. If you're a sole proprietor, you're going to be filling out a form called the Schedule C. At income tax time, it goes with your personal Form 1040. That's your personal tax return, right? And it's not taxed by itself. We'll talk about that in a second. But it's not about how much sales you're bringing in, what your net profit is. It's all about whether you're carrying on that activity with the expectation of making a profit. So the example that I like to give of something that we're not doing with the expectation of earning a profit is like if you inherited your grandma's yarn stash and you're setting up a temporary like eBay, Etsy shop to destash the yarn that you've got, and you're selling all the yarn balls for $5 each, and like, yeah, if you make a little money from it, that's going to be great, but it's not something that you are doing with this long-term intent to make a profit. You're really doing it with the intent to get rid of the yarn. So this is what the first page of the Schedule C looks like. I really should pull up the whole thing. It is pretty straightforward. It is just 2 pages that go again with your personal Form 1040. So this doesn't go off to the IRS by itself. And I'm going to share a link in the chat in case y'all want to look at it yourself. Um, it doesn't, like I said, it doesn't go off to the IRS by itself. It's due April 15th, just like your regular personal taxes. And I know a few people asked in the questions submitted in advance, what if I'm a corporation, a partnership, when is that tax deadline? What do I need to file for that? If you're not a sole proprietorship and you're incorporated, like you're a C Corp or you're an LLC that's been elected to be taxed as an S corporation, or you're a partnership, then you have a March 15th deadline. Your taxes are due a month before our personal taxes, because those types of business entities have to issue special tax forms to you, like a Schedule K, K1, if you've heard of those, that you need in order to do your personal taxes due April 15th. So these other types of business entities are due earlier. They're due first on March 15th. I think it's technically March 17th this year. If you're an LLC, if you've gotten your LLC registration, then as long as there's still one of you, you're a single member LLC, and you haven't made any special tax election to be taxed as a different type of entity, like an S corp, you would know if you did that. Then you are still filling out the Schedule C at tax time. You're still essentially taxed as a sole proprietorship, exactly the same, even with that LLC registration. So this Schedule C, we're carrying on this activity with the reasonable expectation of turning a profit, even if we don't necessarily have a profit yet, totally normal. We're going to be asked on this form to report our sales, our total sales from all sources here at the beginning, and then we get to deduct out our business expenses, otherwise known as your tax deductions, otherwise known as your write-offs. And the end result of that is going to be your net profit if your sales are greater than your expenses, or a loss if your expenses or deductions were more than your sales. And then that end result will be calculated down at the bottom of page 1, and it's going to travel over to your personal tax form, which I'll talk more about in a minute. But this is the form that you'll be filling out. You want to get familiar with it. This is why keeping up with your books all year is so important, so that you have the year-end totals to go on this form. I want to kind of take a little side journey and talk about 1099Ks for a minute, because this is where some of the I don't have to deal with this until XYZ happens comes from. It's where some of the confusion comes from. So your 1099K is a different tax form. We just looked at the Schedule C. The Schedule C is something that you fill out and you send in, right? The 1099K is a tax form that you might receive. So you know when you work like a regular day job with an employer, around this time every year, you get a W-2 in the mail, and they've got your payroll and all of your taxes withheld from your payroll reported on it. That's a tax form we receive, right? A W-2. A 1099K is another type of tax form we might receive, and this is a tax form that payment processors, third-party payment processors like Etsy, Stripe, PayPal, Shopify, etc., might be required to send to you if you made more than a certain amount in total sales on their platform or via their payment processors, like PayPal, for instance. Now, what is the threshold? That has been changing and has been in flux for a while. So for the longest time, up until last year, actually, the threshold was $20,000. So Etsy, PayPal only required to send you a 1099K if they process $20,000 or more in sales on your behalf. Then you got this 1099K that just said, hey, Janet LeBlanc of Paper and Spark made 25 grand on our platform. The kicker is that the IRS gets a copy of that form. So now the IRS has a heads up. Janet LeBlanc of Paper and Spark made 25 grand on Etsy. So that's giving a signal to the IRS. Janet LeBlanc, somewhere on her tax form, better be reporting 25 grand in total revenue. So for me, line 1 of the Schedule C. If Janet LeBlanc's not reporting at least 25 grand somewhere on her taxes, we've got a problem, okay? Red flag for an audit. Now, the thing with 1099Ks is that doesn't, because I got this form, it doesn't mean like, oh, now this stuff is reportable. This stuff needs to go somewhere on the Schedule C. I should have been reporting it regardless of whether I hit the 20K threshold, because again, there is no threshold for reporting it. It's all about whether it's that intent to make a profit. So even if I only made 1K on Etsy, I still should be putting that 1K somewhere on the Schedule C. Or if I'm going to be a hobby, I need to report hobby income elsewhere. I'll talk about that in a second. But my point for you is that getting a 1099K or not doesn't mean anything other than this is how much money you made on this platform. It doesn't mean, and now you got to deal with it, or you don't have to deal with it. But the IRS knows that there were enough of us that thought, hey, if I don't qualify to receive this piece of paper in the mail, I don't have to deal with this. So they got savvy to that and they said, you know what? We're going to dramatically lower this threshold. So all y'all are going to receive 1099Ks. So all y'all can stop not filing taxes and claiming this stuff on your forms. So they said we're going to lower the threshold from 20 grand to $600. Now they've been trying to do that for like the past 3 years now, and they've, no surprise, they've not successfully been able to actually get their act together enough to implement it. So this year they were able to actually do 5K as the threshold for tax year 2024. You probably by now have received a 1099K if you made $5,000 or more in sales on that platform. But know that the end goal by 2026, we'll see if it actually happens by then, is for them to get down to $600. Again, doesn't really mean anything specific for you as to whether or not you need to be reporting it. You should be doing the same thing no matter what, but just know that the IRS is going to have that heads up now. Hey, this person needs to be reporting at least the sum, at least something equal to or greater than the sum of their 1099Ks that we're getting. Does that make sense? So this is sometimes where some of the misinformation stems from. I don't have to deal with this until I have X amount in sales. It's really this 1099K requirement. Let's switch gears for a second and talk about a hobby because in case you're curious, maybe I'm not doing this with the intent to make a profit. I'm assuming everyone here is probably working to make a profit, if not making a profit, right? But if you are doing something without the expectation, without the reasonable expectation of earning a profit, then that's considered a hobby in the eyes of the IRS. They actually call it a not-for-profit activity, not to be confused with a nonprofit. But the kicker is your sales still have to be reported. They just go on a different form. They go on a form called the Schedule 1. And you don't get to deduct your business expenses because you don't have business expenses as deductions. So it's really more beneficial, honestly, to consider yourself a business because you get to reduce your sales by those tax deductions, those expenses. This is what a Schedule 1 looks like. And this is where hobby income would go, activity not engaged in for-profit income. So you'd still put those sales here. If you're curious, your business income from those Schedule Cs will flow to the same form, just line 3, a different place. All right. So the main takeaway that I want you to understand for income tax purposes is that you want to be prepared to report those sales and ideally be able to deduct those expenses on your income tax form in some way, shape, or form. Whether you consider yourself a hobby and you're going straight to that Schedule 1, or you're considering yourself a business and you're going back to that Schedule C and you get to deduct those business expenses. Either way, you've got tax responsibilities. What about tracking wholesale consignment income since who you are selling it to pays the sales tax? That is a good question, Sarah. So, sales tax and income tax are really two separate animals and regulated by two totally different government bodies, government entities, and really have nothing to do with each other. So when you report your income, your total gross receipts or sales here on line 1 of the Schedule C, you're putting everything here in one bucket. All your sales from all sources on all platforms right here on line one. There's nowhere else to report sales. It all gets added together and is reported right here on line one. So if you have some wholesale sales and some retail sales, if you have sales from Etsy and Shopify and in person, if you have some sales that are subject to sales tax and some sales that weren't subject to sales tax, it doesn't matter. All those sales get added together right here on line one. What if you have wholesale consignment sales? Where that is going to matter reporting wise for you is when you do your state sales tax form. So totally different animal. When you're reporting your sales tax stuff, your state is going to ask you for sales that were subject to sales tax. They're going to call that your taxable sales. And they're going to ask for your exempt sales or non-taxable, not subject to sales tax sales. So that's where you would report those wholesale or consignment sales because someone else is dealing with sales tax on those sales. That's also where you would report your Etsy sales, for instance, because Etsy's dealing with sales tax on our behalf right now too. But that state sales tax level is where you need to be concerned about the source and the type of sales. For income tax purposes, it's subject to income tax no matter what. All your sales subject to income tax. Don't care if it was subject to sales tax or not. Totally different thing, right? And I will say an important thing to keep in mind here with your income, if you collected sales tax from your customers, if you actually received it, then you usually include that in your sales total here on line one. And then you get to deduct out the sales tax you paid to your state as a deduction. What if you have two businesses? Do you need two Schedule Cs? Usually, yes. So if it's two sole proprietorships and they're unrelated activities, then you can have multiple Schedule Cs. I used to have my jewelry shop, Paper and Spark, which is digital products, and I was a Disney travel agent. So I had three Schedule Cs every year. Those were three totally unrelated activities, so three different Schedule Cs. Now, if you have different arms of the same business, like you're a graphic designer and you provide graphic design services, but you also sell cards that you've designed or digital products that you've designed, like a clip art shop or whatever, that could all be one Schedule C because it's a pretty related activity with a similar audience and that sort of thing. So it really depends on if the activity is related or not. All right. I think that I got that point about your tax responsibilities across. Hopefully you understand what it means to receive a 1099-K, what the thresholds are going to be, that the IRS is going to have you on their radar. Darlene, can you combine if it's drop ship and print on demand? Yes, yes, that's yeah, I would still be fine combining that, a physical product business, right? All right, so before I get to the rest of our questions, just a few remaining thoughts for getting legit outside of income tax stuff specifically. So, before I get outside of income tax stuff, if you've not looked at that Schedule C before or whatever your income tax form is going to be, if it's something different than the Schedule C, I would print it out and I would take a look at it. It's going to help you know what you can deduct at year end. It's going to help you keep track of the proper stuff in your books. And I also like to look at the instructions for it. They can give us a little bit of insight into what certain expenses are, what to put on different lines, what they're asking for. There's some good information in here. So if you've never walked through it, it's some good reading material if you have insomnia, right? And want to be put to sleep by the lullaby of the IRS. Outside of income tax stuff, These are a few other things that I recommend you do or have on your radar if you haven't already taken care of them. Get a business checking account. There's really no, I will share that link, yes. There's really no downside, or it's not hard these days. When I got started 10 years ago, it was a lot more annoying to open a business bank account because there were like minimum deposit requirements and monthly transaction fees if you didn't have a certain balance and all that sort of stuff. These days, you can use something like Bluevine or Novo to open up an online business checking account pretty easily, and even for free. So this just helps you with doing your books. It's going to help in the unlikely event you're ever audited. Having your business funds separate from your personal just keeps things cleaner. I will say, playing devil's advocate, if you're a sole proprietor, you're not legally required to have a business checking account for your business, but it's still a best practice. I'd still recommend it. But if you get that LLC registration, you do need to have your business funds and a separate account from your personal stuff. Are there rules about what money can or should be used? No, there's not any weird. I know sometimes we feel like there's a weird hangups or something with like, can I fund my business from my personal money or vice versa? You're fine to do that. You can transfer money from your personal checking into a business checking account and start it with that balance. It doesn't have to actually come from your business sales yet. You can fund your own business checking. The only rules with that you need to be aware of are if you're an LLC. An LLC registration essentially is protecting your personal assets in the event your business is ever sued. That's what an LLC does for you. It doesn't really make you a different type of taxable entity or anything. It's protecting your personal assets if your business gets sued. So because that's the point of an LLC, you are required to keep your business assets separate from your personal assets. The business bank accounts I was talking about were Novo and Bluevine. I typed them in the chat. So if you get that LLC registration and you have that separate business bank account with your business funds in it, you're still allowed to transfer personal money into your business bank account, and you're still allowed to transfer business funds back to your personal bank account. That's how you pay yourself. You're fine to do that, but you don't want to pay for personal things out of your business bank account directly. You don't want to pay your your electricity bill for your house out of your business bank account, for instance. You don't want to go to Target and use your business checking account to buy your not business stuff at Target, for instance, because that's going to nullify that protection of your LLC that you've built. Makes sense? But other than that, you can transfer money back and forth. And if you're a sole proprietorship, Amy, it's not truly considered a loan because you are one and the same with your business. It's just an owner's contribution or an owner's draw, in accounting terms. But for tax purposes, like if you look at this Schedule C, what do they not ask for? They ask for your sales, they ask for your expenses. You are taxed on your net profit here. They don't care. You're not asked for the balance of your bank account. You're not asked for how much you contributed as a loan or a contribution to your business. You're not asked how much you withdrew and actually paid yourself. There's nowhere here for your owner draw. That is not asked for because you're considered one and the same with your business. So what I mean by that is, let's say your business makes 100,000 in sales and 60 grand in expenses. So you had a net profit of $40,000, right? It does not matter. Like this will say $40,000, and it does not matter if I left all 40 grand in my business bank account or if I took all 40 grand out and paid myself, put it in my personal checking account. And there's zero left in my business bank account. It does not matter. Either way, I'm going to pay tax on the 40 grand. Doesn't matter what my owner draw or loan to myself or any of that was. Okay. Um, so get that business bank account. Look into anything you may be required to do in your local area. So at the state level, what you need to be looking for is whether you need a state sales tax permit. That's usually with your Department of Revenue. At the county local level, you often need to look at whether you need a DBA, that's a doing business as license or permit. Sometimes it's called a fictitious name or an assumed name license. That's just a piece of paper that gives you the ability to run your business under a name that's different than your legal name. So those are the two main things to be looking at the state and local level. Have a bookkeeping system to support you. I do have bookkeeping spreadsheets, so I'm biased towards my system, but the best system for you is the one that you understand how to use, because the most important thing is that you're using it, right? That you're keeping it updated, ideally every month. So whatever system clicks with the way that your brain works so that you'll actually be using it and updating it is the route to go for you. All right, I want to get to y'all's questions. I have this Get Legit checklist that kind of summarizes all of these different tasks to have your financial ducks in a row available for y'all to download. The link is paperandspark.com/Eden. I will share it here. And I'm also happy to offer a 15% off coupon for all of my bookkeeping templates. I've seen y'all talking about it a bit in the chat, but know that that is available to you as well. If you are looking for a bookkeeping system to support you. One thing that I didn't touch on that I said I would, and I didn't, that I want to make sure everyone understands before I get to the questions, is when I said that your business is not taxed in a vacuum. So we talked about how you get that net income number on the Schedule C, and it travels over to that Schedule 1. I don't want to leave you hanging there. I want you to know where it goes after that Schedule 1. It travels over here to your actual Form 1040. Somewhere over here, somewhere on one of these lines, right here, line 10, adjustments to income from Schedule 1. And it gets added to, so in that example, I had 40 grand as your net income, right? It gets added to all the rest of your income sources. So if you have a regular W-2 job, if you're filing with a partner and they have a regular W-2 job, it will get added to that. If you have dividends, interest, any other sort of forms of income coming in, it's going to get added to that number. And then you're going to take out your standard deduction or your itemized deductions. If you get credits, if you've had with tax withheld from a regular paycheck, all of that will get subtracted from here as well. So I just want you to understand that your business, that 40 grand, is not taxed by itself. It gets lumped in with all your personal tax stuff, and you may or may not end up owing money on that total taxable income based on what else is going on in your financial situation, right? So I see people ask a lot, like, how much should I be setting aside to pay my tax bill? How do I know how much I'm going to owe on this? All of that stuff. It's really hard to say unless you look at your full financial situation here. You've got to be accounting for any other income you have, any other tax you're paying from other sources. Unfortunately, it's complicated, but that's what ends up happening with that Schedule C income. All right. I'm going to scroll back and start checking y'all's questions because I know I missed a few. All right. What if I didn't send in a Schedule C yet and I'm a sole proprietor LLC? Well, Anne, I would get started on doing the Schedule C. If you've not done your 2024 taxes yet and you have sales in 2024 for your sole proprietorship for your LLC, then I would plan to do a Schedule C for this year. Caitlin, for the sales tax tracking, what qualifies and what's exempt, were you referring to a space on the tax forms or on your sales tax filing to your state? I'm referring to the sales tax forms with your state. That's the only place you're going to be asked about exempt versus wholesale versus taxable. On this form, you're going to lump everything together because it's all subject to income tax. These income tax forms don't care whatsoever about anything related to your sales tax stuff. So for Etsy, on your state sales tax form, your Etsy sales, whether they were in state or out of state, would all be exempt. What if you're selling used items in eBay and other seller site? That is more of a toss-up. So if you're running an eBay site like that, where like you're sourcing used items and cleaning them up and marking them up and selling them, and like you're going to Goodwill, you're going to garage sales, and you're doing this to make a profit, sole proprietorship, Schedule C, that's what you want to do. And you want to be able to deduct how much you originally paid for them, which becomes complicated because you ideally want receipts. And I know those are situations where it's harder to get receipts. If you're selling your own used stuff occasionally on eBay to get rid of it, less likely that you're going to have to do a Schedule C here, more likely that you just need to be prepared to report that income on that Schedule 1 as an activity not engaged in for profit, as a hobby. All right, we got Novo and Bluevine. Lydia, okay, bookkeeping systems. We've got the Paper and Spark spreadsheets, so self-plug. These are spreadsheet templates that I developed as an e-commerce seller myself. My goal with them is to be very user-friendly, not give you any more bells and whistles than what you need. Because again, we want you to keep them up to date. We want you to actually be using them and tracking your numbers and getting what you need out of them. They come with step-by-step video instructions and written instructions too, and a lot of support from me. And I'm a CPA that's well versed with e-commerce, which I think is important. They sync up with platforms like Etsy, eBay, Amazon, Square, Shopify, Squarespace, and PayPal. Other than spreadsheets, QuickBooks is like the golden standard amongst bookkeepers. It's made for accountants, so I feel like it's got more of a learning curve, but it can be more automated, which can be a pro. And yeah, there's lots of different versions, so you just want to be careful choosing what version is going to be the best fit for your business. And QuickBooks is a monthly subscription fee, so keep that in mind. Those are pretty much the two most popular bookkeeping systems these days. Wave is another one to look at. Wave is free, and it is more of an automated software. It's very bare bones though. The GoDaddy, formerly known as Outright, used to be a popular option, but they discontinued about a year or two ago, I think. So if you have a physical store and digital store, do they both need to be an LLC, or can we have one as an LLC and one as a sub-company of the parent LLC? Asked by Sarah. Either of those is fine. They can be under the same LLC. They could be one sole proprietorship. You don't necessarily need to have, I don't know if you mean a physical product store and a digital product store, or if you mean you have like a brick and mortar store and a digital product store. But any of those ways of setting it up are fine. Having separate LLCs, the main point of doing it that way is just remembering that that LLC gives you protection in the event that that business is sued. So if for some reason you wanted to protect the digital store's assets from if the physical store gets sued, then you'd want separate LLCs for each of them. Alyssa, could a portion of my electrical be a write-off with having a home office? Potentially, yes. So we have what's called the home office deduction, or it's really called the business use of home deduction over here on line 30 of the Schedule C. And that's a deduction that you can take if you use a room in your home or an area of your home regularly and exclusively for running your business. The exclusively part is the kicker. And you want to make sure that you're doing this right because it is an area of a more likely area for being audited. So if you have a guest bedroom, for example, that you use to run your shop from, and sometimes guests actually sleep in the guest bedroom, it's not used exclusively for running your business, so you wouldn't qualify. So make sure you meet that exclusivity test. And then if you do that, this is the area where you could potentially write off part of your electricity bill, amongst other stuff. All right, I think Stacy asked that same question also. Thank you, Jennifer, for the kind words about the spreadsheet. All right, I think we talked about eBay. What is it that we need to check locally again? JC, you want to check with your state, usually the Department of Revenue, for whether you need a sales tax permit. Is what you're selling subject to sales tax where you are? If you're selling digital products, for example, those are subject to sales tax like 50% of the time, depending on what state you're in. And it also will depend where you are selling. If you're only selling on certain places online, you may not have to deal with sales tax. This is a good resource for digging into sales tax that I'll leave you with. Because that's a whole other animal. And then, okay, so that was the state level, JC. And then at the local, county, city level, you want to be looking as to whether you need a DBA permit. A DBA is doing business as. Different locations call it different things. Some will call it DBA license, some will call it assumed name license, some will call it fictitious name license. It gives you the ability to run, unless I started my Etsy shop as like Janet LeBlanc Jewelry, Janet LeBlanc Designs, unless my business has my legal name in it, then I had to get a DBA that said Paper and Spark is the same thing as Janet LeBlanc. That's what that piece of paper gives me. What line on the 1040 do you put your Schedule C? It will end up traveling first to the Schedule 1, and then everything from the Schedule 1 will end up being lumped up here on line 8. I put it in the wrong place right here. It should be line 8, not line 10. Additional income from Schedule 1, line 10. Amy, I have a sales tax number and I sell exclusively on Etsy. Am I correct in understanding that Etsy handles submitting the taxes as needed? The sales taxes, yes. Not income taxes, but sales taxes. Therefore, am I just reporting sales and noting that taxes have already been facilitated by, yes. So Amy, every state's sales tax form is going to be slightly different and ask for things in a slightly different way. But what you're looking for on your state's form is an area to either report marketplace facilitator sales, exempt sales, non-taxable sales. They're going to ask for something like that. That's where your Etsy sales would go. Bottom line is that they're not subject to sales tax. And you just want to make sure they're being reported that way somewhere on the form. I'm going to switch over to the Q&A box for a second. Does contributing to an IRA reduce your tax bill? I missed out on paying estimated taxes last year. I'm not a huge expert in all things like retirement plans. And this one's kind of open-ended because you could have a personal IRA account or you could try and have some sort of, like I have an SEP IRA for self-employed people under my business. So, from a business perspective, assuming we're talking about an IRA under your business name and not, oh, should I hit answer live? Sorry. Um, I don't know if I did that right, but I hit answer live. I don't know if that does anything.
You're good. It
Okay.
just marks it as being answered so you don't lose
Okay.
track. Yeah.
Okay. Thanks. Um, if you set up the proper type of IRA under your business, then you can claim that as a business expense and you can get a deduction for that. But it really depends on the specific like type of retirement vehicle. I would look at an SEP IRA for that. Um, I don't know anything about life insurance, so sorry, I can't answer that one. Dependents with a business, that's also a complicated situation. I'd say generally it's likely they're going to need to file their own tax return. But that's something that I definitely would reach out to an accountant to help with. Same thing, unfortunately, with everything related to international tax issues outside my realm of expertise. Is HoneyBook an accounting software? I've never worked personally with HoneyBook before, so if anyone has, feel free to chime in. But I was under the impression that it's kind of like FreshBooks, kind of like more of an invoicing or CRM type of software, but not necessarily bookkeeping itself, not like double entry bookkeeping, but kind of has some like light revenue tracking ability because it's an invoicing software. That was my understanding of HoneyBook, but I'm not totally sure. All right. Jennifer asked, when do you recommend it would be time to start an LLC instead of a sole proprietorship? I don't necessarily think you ever have to become an LLC, but the main benefit is to protect your personal assets if you're sued. So if you're selling something like candles, something like food, something for kids or babies, any of those things that put you a little bit more at risk, I would look into getting an LLC registration. Some people like to get it just because it kind of like further legitimizes your business, even if you're not worried about getting sued. And I would say if that's something you want to do, um, look into so the NLLC registration is done at the state level, right? Usually with your Secretary of State. Some states, like here in South Carolina, it's $150 to get your LLC registration. In states like California, it can be $800. So, and sometimes there's annual renewal fees as well. So look into the costs associated with it. If it's not really something you need, then whether it's like affordable or not could be part of that consideration. Bethany, is it better to file as a partnership or an LLC? I co-own with my mom. So if you put both of your names on the LLC, you would be a multi-member LLC, and that would be essentially a partnership. You would be taxed as a partnership, filing a partnership return for March 15th. Partnership returns in general are going to be more complicated, but that would be the case if you and your mom are both on the business in name, then whether you have an LLC registration or not, you're still a partnership. And for that, I would recommend working with a tax professional or an accountant for sure. The discount code is Eden15. Okay, thank you, Eden, for sharing the link to my shop. If you are a sole proprietor, can you have multiple DBAs? Yes, you can. Multiple DBAs, multiple Schedule Cs. Some locals for years are using the category of providing service by donation rather than hobby or business. I'm not quite sure what you mean by that, Lee. I think I need more details. And if it's something that you want to like give me the full rundown, the full scenario, or for anyone watching the replay later that has questions, y'all are welcome to email me at hello@paperandspark.com. That goes to me directly. So maybe email me that question with some more details. Can you repeat what you said about separate LLCs? You can't have multiple DBAs under your LLC, or you should have separate EINs for each. All right, so multiple things wrapped up in that question. You can have multiple DBAs under one LLC in most states. That is fine. If you wanted to protect each business from another business getting sued, then you would want multiple LLCs. Um, Otherwise, if that's not a concern for you, it's fine to have one LLC with multiple DBAs under it, or even multiple LLCs under it. You are going to get only one EIN for your social security number. So we didn't talk about EINs. Those are employer identification numbers. It's like a social security number for your business. You're not required to get one unless you're an employer or if you get that LLC registration. Usually an LLC is going to come with its own EIN, but you won't be able to get separate EINs for DBAs because it's all attached to one, the same social security number. Jen, I'm confused. As a sole proprietor, are we required to do the BOI filing, or is that only if you are an LLC? Only if you're an LLC. Only LLCs need to do the BOI filing. Are your products, hold on, I lost it. Where did it go? Useful for someone who, like me, is looking to start a blog or a vlog. So my spreadsheet templates will import in from a few different sources. They will import in from Etsy, PayPal, Shopify, Square, Squarespace, Amazon, and eBay. So if you're planning on like having digital products as part of your blog or invoicing affiliates or something via PayPal, if you're planning on using one of these payment processors, then I would say it still makes sense. All of them also have customizable space where you can manually enter in sales from other sources. So you don't have to sell or use only one of these platforms for them to work for you. And the good thing about spreadsheet templates is that they're highly customizable. So if there's an expense tab on here that's like for your materials, and as a vlogger, you don't have any raw materials and supplies, you can rename that expense tab to be something that does apply to you, for instance. Can you deduct the total cost of equipment bought in a year, or does it need to be deducted over several years? And that is one of the questions that was submitted in advance too, was a question about equipment and that sort of thing that goes towards your business. So in general, we get to deduct all of our business expenses, right? They go over here in part 2 of the Schedule C. And we're only deducting expenses in the year that we actually paid them, right? Now, there are a few exceptions to that rule. One of them is equipment or an asset. So an asset is something that we pay for, like an expense, but it's going to benefit us over more than 1 year. It's going to be useful to our business over multiple years. And that is something that instead of being deducted in the year of purchase, we may need to depreciate it instead. Depreciating is a fancy accounting word for dividing the cost up over multiple years and just deducting a piece of that expense every year. So we spread the deduction out over time. Usually something like a printer, a computer, furniture, a heat press, any like big expensive purchase is something that may need to be depreciated. Usually we default to needing to depreciate it, like that's the default tax treatment. But in many cases, and depending on the amount, you're allowed to elect to deduct it all in the year of purchase instead. Any sort of tax software or tax pro worth their salt should be walking you through both of those scenarios. And you should go for whichever one is going to be the most beneficial for you. So if I have a big taxable income this year, like my net profit of 40 grand, I may choose to elect to deduct the whole cost of the printer this year because it's going to lower my taxable income and lower my tax bill. If I'm already at a loss this year, or I think next year my taxable income is going to be higher, I would rather depreciate it and spread the costs out over the next few years so that I can benefit from that deduction in years to come. So you kind of need to walk through both scenarios. Amy, as a sole proprietor, does the IRS cap the number of years you can show a loss on the Schedule C before they disallow any more deductions? So there's not a hard and fast rule, but they do ideally tell us, or they've said in the past, they've released guidelines in the past that if you start having too many years of losses, like 3 out of the past 5 years, you're more likely to trigger a hobby audit. And if that happens, it's not like a guarantee. It's not like something that definitely happens after you claim this many losses. If that happens, then you would need to show them, you would need to prove to a hobby auditor that you are doing this activity with the intent to make a profit. Even if you haven't been making a profit, you've got all your licenses and registrations up to date. You've got that business bank account. You've been keeping up with your books. You've been taking steps to try to make changes to make a profit. And that's the sort of thing that you would have to be able to show. If you have an LLC and you want to open multiple stores, does that mean multiple DBAs? Yes, most likely. How do you protect each DBA under one LLC if it's all together? If you have multiple DBAs under one LLC, then the DBAs are not protected from each other. But all of them under the LLC are separate from you. So if someone sued any individual DBA, again, this is pretty unlikely, right, that we're going to get sued, hopefully, but if someone were to sue one of those DBAs under the LLC, they can't come after your personal assets because you have the LLC, but they could go after the other DBA's assets. Jen, I filed for my EIN last year to be able to open up a business bank account, but I still have everything under my personal social as everything slowed down for my business. Does that cause any issue, or is there anything different I need to do come tax filing since I haven't put that EIN into effect? The only issue that I would say to watch out for is when you start getting these 1099Ks from these platforms, they're going to issue the 1099K to whatever tax ID number you've given them. So if you've given them your social and you're filing your Schedule C with your social security number, that's fine. If you put your EIN, most tax software only lets you put one or the other here, okay? Your social or your EIN. If you put your EIN here and you've gotten 1099Ks to your social, that can get kind of yucky. You just want all the places on the internet to have one number for you. The 1099K is to be going to one number for you, and you to be using that one number here on the Schedule C, just to keep things clean. So if you're a sole proprietor, do you use EINs? You can get an EIN. You still can get an EIN as a sole proprietor. It's free at irs.gov. There's no downside to getting one. It just protects you from having to like share your social with Etsy. And I thought EINs are sometimes used by other businesses so you can buy at better wholesale pricing. That's usually a sales tax permit, not usually your EIN. All right. I think we've got to most of the questions. I think I'll say if I didn't get to your question, let me tackle Mindy's real quick because that's a good one. Mindy, my main suggestion, Mindy asks, speaking of using an accountant, would it be beneficial to find one who specializes in artists? Yes, my main suggestion, accountants, tax pros, they're just like doctors. They specialize in one area of accounting or taxes. And ideally, I think it's more important to find someone that understands e-commerce or digital products or handmade products, whatever it is you're making and selling, more so than finding someone that's necessarily located in the same town as you. Um, I have a list at the bottom of this post that I'll share. Where are they? With, I think it's at the beginning actually, with a few people that I recommend that are well versed with working with e-commerce, if you need that. But that is usually okay. Yeah. Um, but those are the people that I recommend. Yeah. And it's different too if you're looking for someone who is going to prep your tax return versus do your books versus give you tax strategy. Those are different types of people. So keep that in mind. For everyone else with an outstanding question and you want to email me, my email address is hello@paperandspark.com. Also, if you're on my shop site, you'll have this little chat bubble down here that goes to me if I'm there, if I'm around. So you're welcome to send your questions through that chat bubble as well. Eden, how are we doing?
I think we're good. This was so incredible. Thank you so much, Janet. I've heard you chat about this countless times at this point, but I feel like I learn something new every single time. So
Oh,
always a
good.
pleasure.
Yeah, thank you so much for having me. And I hope that this was helpful. And I hope that everyone feels just at least a teeny bit better and less gross when it comes to these topics.
Awesome. Thank you so much, Janet, and thank you to everybody who tuned in. And I, like I said in the chat, will do my very best to get this recording out to you guys by the end of the week. So look out for that in your inbox. All right. Thanks,
Thank
everyone.
you.
Bye.
Thanks, y'all.